Hello, everyone, and welcome to the weekend edition of Market Wrap. I'm Moe Ansari, president of Compak Asset Management, host of the daily edition of Market Wrap. A lot of you have been tuning in for the last 30 plus years to the daily edition, where I do a 1 hour radio broadcast that you can tune in every single day and get a daily update. Also, great guests on the broadcast, and you can get all of the information simply by clicking on the link below that you see on your screen right now. If you'd like to get more information, download the app from the iTunes store, and then you automatically get the daily edition also. And don't forget to subscribe to this channel, so whenever I post a new video for the weekend, or whenever during the week, if there is some special market movement, I will post special updates, so you will be notified immediately when I do post an update. Today I'm going to talk about the Pandemic Update Housing Edition. What is the housing market? What's going on with it? Is it crashing? Is it an opportunity? A lot of people missed 2008 and 9 when the market crashed. You heard me say on the radio broadcast, this is the best buying opportunity we're going to get in real estate. People said, Mo, are you crazy? People are going, everybody's losing their homes. I said, well, that's when you buy. The last time I saw this opportunity, when the RTC took over the S&L crisis. I know a lot of you don't remember that. It was in the early 80s that we saw the S&L crisis, and all the condos were up and the RTC was there. Every 30 years or so, we got a major bust in the real estate market. This is not it, what we're seeing now. But is it an opportunity? I'm going to talk about that. What about China? What's going on with China? Are we totally decoupling with China? Can we decouple with China? I'm going to answer that question also. And then the technical analysis, the language of the markets. What are the markets trying to tell us? I'll put up all the charts right on your screen so you can see what happened this week and what to expect next week. Let's start with the coronavirus pandemic. The numbers, they're looking okay. If you look at the numbers here in all of these blue states right here, they are coming down. That is good. They're down about 10%. The gray states right here that we're looking at all along, these gray states, they are neutral. They're not going up, not going down, just about okay. The states in tan right here, and Hawaii, there's only 4 states that are going up. Overall, the COVID infections are down about 10% for the year, for this past week. So it is not going away, but is not increasing. That is the good news. More people are social distancing, more people are being smart, more people are taking, washing their hands and just being careful. That's all we can do. There's not much we can do right now with the virus. But that's the good news in the United States. The bad news is there's a second wave, and it is starting to hit Europe. They reopened, as we know. Their numbers were very good in Europe. And as the numbers got better, they opened more, they went back to school, and now they're seeing the second wave. The numbers are nowhere close to what we have here in the United States, but the numbers are going up. And it is also stalling some of the economic growth in Europe. Europe, everybody's expecting it to do well, especially with the Eurobond, them all coalescing around a European Union, issuing a national European Union bond that is going to be mutually the debt is going to be paid by all of the countries, not one. So that is going to help some of the southern states like Italy and Portugal and Spain. But so far with the virus, the numbers, we got the PMI numbers we had in Europe, they were down from 54 down to 51. So it is slowing. Above 50 is still growing, but that is what people are a little bit concerned about in Europe. As far as the vaccines are concerned, which everybody's waiting for, we still have 8 in phase 3. That's where we get all of the ones that are being tested, 10, 20, 30,000 people, and that's where we are doing the major testing. No increase in numbers there. Johnson & Johnson announced today they're going to have a trial with 60,000 people. There are 2 vaccines that are already out there, not approved by the FDA. It's the Sputnik 5, as it's called. That's the Russian vaccine. I don't know how many people they gave it to, about 20 people now. Everybody can take it, and they will be the phase 3 trial basically for it. So that is not something that that anybody is going out to get right now, but there is a Chinese virus out there that is being tested or just being given right now to all of their military. They're also giving 40 million doses, as I heard. First country that they're going to give it to is Pakistan, where they're giving 40 million doses out of this vaccine. We haven't seen the efficacy of this yet. We haven't seen the FDA do testing on it yet. If it is something, I don't think that we are going to get the China vaccine at this point. We're not going to go out, get that vaccine. I think most of the people here in the United States are going to wait for the phase 3 trials of European or American vaccines when they are available. They're still expected to be somewhere by the end of this year to be able to be mass distributed. We're also still waiting for round 2. That's what the market is waiting for, the stimulus round 2. That's the HEROES Act. That's what the Democrats want. About $3.4 trillion right there is what they're looking at. They did lower their number to about $2 trillion. That's what they said. The Republicans are still at $1 trillion. I think they still wait. I think everybody is going to wait and watch and see how the numbers come out, the unemployment numbers. If they get worse, then the Democrats are thinking the Republicans might want to negotiate. If the numbers continue to get well, then the Republicans think the Democrats might come to the table. So it's political time. It's election time. We're 74 days away from the election. So I think it'll be difficult to get a deal done unless the stock market starts to come down, unless we start see unemployment starting to go up dramatically, unless we see a lot more unfortunately, a lot more bad things happening to the economy. That's when politicians might come together very quickly. But in the short term, there's not that urgency we don't see out there right now. And is the housing market in trouble? A lot of you have been calling me and asking me about that, Mo, on the radio, saying, do you think it's time to buy into the real estate market? Well, if you look at all of the sectors right here, the industrials are doing well. If you look at the sectors out there, you look at the energy sector, it is doing well. You're looking at all of these are all plus. There are only 2 sectors that are in the negative, real estate and housing as far as the S&P is concerned. And what more so, it's Class C. That's the low-income housing. If you look at that, in mid-March, last year, January through March, earlier this year, we saw 80% of the people paying their rent. In April, it went down to 60%. 66. In May, it went down to 64. In June, it was down to 54. July, it's down to 37. So there's a lot more people that cannot pay their rent. But that is Class C housing. That is, unfortunately, the low end of the housing market. What is happening to the mid-market right now? Well, we got housing numbers, existing home sales. There was previously owned homes. Their sales were up 24.7%, 25%. 34% of the sales that we're seeing are to first-time buyers. And these are in the 20s and 30s. They're the millennials. Finally, you remember everybody saying the millennials are not going to live in the suburbs. They're going to live in the cities. They want to go walk to the restaurants. They want to do that. Well, as they get older and they realize, well, I'm getting married. I might have a kid or two. I might need more room. Everybody is moving. And now with people do not have to go to work, do not have to drive to work. And that, I think, is going to be a trend. Even when we open up, even when we have the vaccines, I think people are going to go back to maybe working 3 days a week in an office, 2 days at home. They might rotate the staff. So if people are looking for bigger homes, they're looking for homes in the suburbs. Where they don't have to drive every day. The median home price is up 8.5%. That's what we're looking at right now. 8.5% from a year earlier. That's a huge increase in prices. Housing starts just came out between June and July. We're up 22.6%. So overall, what has happened, there's not a lot of inventory. Inventory is down about 21%, and low interest rates. People are finally realizing this is, again, an opportunity. It's not the big bust of 2008 and 9, it is a correction, or at least a pullback in the market that we saw. Now prices are starting to go back up. People are saying this is the opportunity, and I think real estate is going to be okay as long as the Fed continues to pump money into the economy. As long as we continue to get Federal Reserve and governmental support, Congress and the administration keep pumping money into the economy. As you've heard me say on the radio, it goes 2 places. in the stock market and in the real estate market. Asset prices go up when the Fed and the Federal Reserve pump money in the system. As I said in 2011, you heard my saying, cash is trash. Well, I think right now it is someplace that you want to be, but you want to be in real estate and you want to make sure you have stocks in your portfolio. Everybody's saying, okay, China, we can decouple from China. As you know, we put more restrictions on Huawei, and everybody's concerned. But China is not the USSR. China is a different situation. If you've been listening to radio broadcasts for 20 years, I've said China is going to do this differently. They're going to build up economically before they build up militarily. They want to get rich. Once they're rich, then they can buy all the other stuff and build a military. That's exactly what they have done and what they're doing now. If you look at the number of companies in the S&P, or the 500 largest companies by revenue, these are the largest companies by revenue in the world. Fortune 500 list in the world, not US. In 1995, China had 3 of them. We had 151 of those companies. In 2020, China has 124 of the largest companies in the world. That's what China has. We have 121. So China is not some financial backwater that you can just push around. It is a global power. And how the powers adjust, we are a superpower, China is coming up. How does the new superpower, how does the older superpower and the new superpower work together? Are we going to work together? That is a question that will be answered over the next 5 or 10 years. I don't think we're going back to being all chummy and hoping that Chinese are going to become responsible partners in the global community. They have decided they're not going to do that. Now, will it be a Cold War? I don't know that either. I believe that China and the United States are going to grudgingly come to some kind of agreement, and they're going to come back together. But it will not be to where we were. It will still be an adversarial relationship, but it will not be like the USSR and the United States. It will be more trade friction, less military friction, but there will be some military friction also, I believe, over the next 5 to 10 years. But we're not going to completely, we just can't, the world just can't completely decouple from China, and China cannot decouple from the world because it's integrated, but it will cause a lot of friction in the world, and we have to be prepared for that. Looking at the markets, now my favorite analysis of the markets, we look at the S&P, it continues the daily chart of the S&P. It is at a 5th wave high. I mentioned this on the radio today. I talked about this. This was, somebody asked me, what is an ABC correction? This was the February high. Markets move in 5 waves, wave 1, wave 2, 3, 4, and once they get to 5, that's the end of the move. Then we are going to see an A, B, C correction or a pullback. And then we start a new wave count. This was the A, B, C down in the market. Now we've gone through the 1, 2, 3, 4, and this is wave 5. Once we get to wave 5, we get an ABC correction. Not as severe as what we saw in March, but we'll get some kind of pullback. And that's what I anticipate that we are going to see. The pullbacks that I'm looking at, if you look at the numbers of the S&P 500, somewhere on the daily charts, the 3330 is the 20-day moving average. That is the 4th support area. We break that, then we go to the 50-day moving average, which is around 3320. And then the 200-day moving average, this line right here, which is around 3073. So those are the 3 support areas. On the upside, I've mentioned 3450 as my first target. Once we get above the new all-time high, which we are at now, I think we get above 3400, get above to 3450. But once we make a new high, you heard Sam Stovall this week on the radio broadcast, he said that once we get to a new high, usually we get a 5 to 7% correction. August and September seasonally are the worst months for the market. Also, we are going to get more election anxiety. My God, if he wins, that's going to be the end of the world. Who? Whoever wins. Half the set say, oh my God, if he wins, the other half said, if he wins. Folks, we have an election every 4 years. It will not be the end of the world, but you have to know if A happens, you're going to do B, and B happens, you're going to do C. you have to have the plans in place, and you have to look at the ramifications of the election. Who wins? What does that mean? And have those plans laid out. I'm going to talk about more about those plans in the coming weeks as we get closer and closer to the election. Weekly market, S&P, this is wave, we saw the fifth wave top. We saw the ABC correction. Now we're in wave 3. We could see a wave 4th pullback. Each one of these little lines that you see in green and red are 1 week of trading in the market. Here's the NASDAQ chart. Again, wave 3, not wave 5 like we saw in the S&P. Support is here, here, and all the way down here. This is a 200-day moving average, which is somewhere around 9,200. The 20-day is around 10,900, and the 30-day moving average is right around 10,500. So we could get, somewhere around 1,000-point correction. If we do, I think if we do get a pullback, an ABC correction in the S&P, or if you get a correction in the NASDAQ, I would view those as buying opportunities. As I talked about last week, there's 5 companies out of 500 in the S&P that are up about 39%. 495 companies in the S&P are down. Are they all bad companies? No. But the 5 tech companies are leading. The other, I think we could see sort of a slowdown in the tech and a move up in the other companies, the rest of the world, as we open up and as we get closer to a vaccine. Here's the weekly chart for the NASDAQ, also looking pretty good, but this is again wave 3. We could see a 4th wave pullback up to here, and if we do, that sets up another buying opportunity. Crude oil, I think, is just going sideways right now. OPEC did have the joint ministerial meeting, not a full OPEC meeting. They're going to keep production at 7.7 million, the pullback that they have off the market. And I think a little bit of anxiety with the COVID starting to reassert itself in Europe, starting to see a resurgence here in the U.S. I think we could see a little bit of sideways. Also, the rig count here in the United States is going up. And with that, it means that the supply and demand is pretty much in balance, but people are a little bit concerned about the demand if COVID starts to come back up. Gold starting to pull back. I talked about how we could see this was a 3rd wave top. We could see a 4th wave pullback. Well, I think here 1,800 to 1,775 to about 1,850, if we get anywhere around there, would be a 4th wave pullback and a buying opportunity. That is a wrap-up of markets this week on August 21st. Again, thank you so much for tuning in. If you want more information, first of all, subscribe to this channel. Don't forget to do that. So whenever I post an update, you will get notified. If you want more information for your portfolio, just click on the link below and you can make an appointment where I can sit down, review your portfolio, tell you what your risk number is, and go from there. One of these weeks, I'm going to talk about how we determine your risk number. Also, don't forget that I'm going to do a 1-hour webinar on the 2nd of September. Again, if you'd like to go and get information, just click on the link below or go to compak.com, compak.com, and make a reservation for the next webinar. That's September 2nd. Hope you have a great weekend. Stay safe. I will be back with you next week with the weekend Compak Market Wrap YouTube update.